What is up, you degenerates, you perma bears who are in the closet, people who think that we're somehow in a bull market that's finding the bottom, and losers who have blown your portfolio because you tried to play your bias and not the chart that was presented in front of you? Welcome back to Trades and Gains, the only place where we cut through the CNBC bullshit and get real about what's actually moving your money like two butt cheeks during prime time at the strip club on a Saturday. If you thought Thursday's 1,700 point drop was bad, well, Friday said, hold my beer here, sir, because we're about to show you really what's up. Anyways, we already talked about this. The Dow is down on the week, 3,300 points, or down 8%. The Nasdaq's down 10%, which is officially in bear market territory. And the S&P 500 also shed 9% like it was on a Jenny Craig diet or a Slim Fast diet, all right? But we're blaming tariffs, China, Powell, and market addicted to cheap money. Let's go ahead and make like a pair of butt cheeks and dive straight into this thing. So, last week, all this baby mama drama started on Wednesday when Trump dropped the Liberation Day tariff bomb. It was a blanket 10% on all imports, with bad actors like China facing an additional 34%. So that was a 54% tariff overall. Wall Street tried to laugh it off on Friday, and China hit back, unfortunately, before the joke could land. They announced a matching 34% tariff on all U.S. imported products starting April 10th. So we basically kicked China in the balls and said, you want economic warfare? We'll give you economic warfare. And then China said, fuck you, watch this. And we really can't afford it because most Americans right now, I don't know if you know this, can't afford shit. Rent, groceries, basic bills, it's all going to shit. And by the way, that's not all. Europe hasn't even fucking retaliated yet. And when they do, guess what? It's going to target that U.S. luxury import, agriculture, and even tech components that we, for some reason, rely on Europe for. Now, the numbers, absolutely historic. As we mentioned, we have the Dow that's down over 3,300 points on the week, which is entering that correction territory specifically. We have the Nasdaq down 5.8% on the day, or 10% on the week, which is officially that bear market territory as well. And the S&P was down 9% weekly, which is its worst week since 2020. Again, that sweep the leg Johnny Karate Kid moment was Trump initiating those tariffs. Now, this wasn't just a sell-off. It was a margin call moment. Over $2.5 trillion in value was wiped off the board on Friday alone. Now, the macro takeaways, I mean, I don't know how else you can really look at it. Recession risk is back in the driver's seat. Even the March jobs report, normally a big headline for the market, got buried at 228,000 jobs being added, beating expectations, but unemployment was the catalyst, and it ticked up from 4.1% to 4.2%. And if it's one thing that a horrible labor market in America hates, it is a unemployment rate, even though we don't want to employ anyone. So that's confusing. But Powell also blinked. He rose up out of his coffin. People thought he was dead, and he went and he blinked. He said the tariffs were higher than anticipated. Not sure how That sentence doesn't even make sense. Oh my God. You know what? I'll do another video on my feelings about that. But inflation may not be so transitory this time around. Yeah, by the way, watch our inflation. This is my prediction for inflation. And mind you, I haven't really missed many predictions in the last year. Just go ask my friends. Inflation goes up to 5%. So that's my number. 5%. We're going to be 3% away from that 2% goal that the Fed set. So guess what, America? GFY and SMDFTBB. And if you know what those things mean, you won't be too happy. Anyways, we don't have rate cuts on the table. Now, granted, we have 5 rate cuts that are being projected by Wall Street, but fuck Wall Street, because what have they done for us other than lose us money? But the market, again, it's at 5 rate cuts on the year. Inflation is good for rate cuts, by the way. It is and not inflation. Inflation's good for rate cut. If inflation rises and we have tariffs rise, it's good for rate cuts. So that's all you really need to know. Now, every single sector we have is currently red. Let's go ahead and make like Usain Bolt and run this down for everybody. In tech, we had Amazon drop 4.5%. We had Tesla cratering at 11% and NVDA falling a solid 8% as well. With retail, Wayfair and Nike and Best Buy all absolutely nuked. Now, Nike, Vietnam is out there going, you know what? We don't want this beef, so can we try to work something out? So Nike kind of bounced there because a lot of their sneakers are made in Vietnam because apparently child labor is still legal over there. For energy, we had oil that was down 8% Friday alone thanks to China tariffs, plus a surprise on OPEC, plus an output boost. So expect your gas to get more expensive, folks. And we had consumer discretionary, which we've been tracking, and I've been warning you all that is going to be a total clusterfuck and punch in the face. Well, it is a total bloodbath, just as I predicted. It wasn't coming in hot. You have people who can't afford rent. Why do you think they're going to go out and buy a fucking bidet to clean their asshole from Walmart? They're not. Why do you think they're going to go buy those products you're promoting shamelessly on your Instagram reels and Facebook? They're not. So just stop. Just stop. You're being predatory QVC promoters who are just promoting to senior citizens at this point. Anyways, we are moving on to our favorite segment, one of my favorite segments, just because these guys are awesome, Investor Central Club. This is where we get our actionable flow insights. Now, mind you, we did numbers last week with the boys. We had Apple calls that went from $19 to currently around $700, $800 per contract. That is a almost 4,000% gain, and we still have a week on those bad boys. And guess what? Apple's going to keep dropping because guess what? Apple is mainly made in China. Anyways, go to investorcentralclub.com. I also have a link for you if you're interested. Go ahead and DM me, and I will send it over to you. But let's go ahead and dive into the booty hole of some Flow Watch and what happened exactly. So, on the week, we had $887 million in total flow with only $79 million in calls with over $800 million in puts. Yes, that's $800 million. And the most common contract was that $550 put that is expiring on the 17th of April of 2025. These people are raking in millions, people, because guess what? SPY's at like 505. And they bought these mofos like a while ago, at the beginning of the week when they were still cheap. So just know The big boys are up. The big boys are up. The boats are getting carried to the shore. All right. We had IWM also with 292 million in total flow overall, with 30 million coming in calls against 262 million in puts. And we had some big orders. Our most popular order were the $180 puts expiring on May 16th, 2025, the 180s. We had a $7.24 million block alone smack those. So we're expecting a lot more downside on IWM, which makes sense because if you think about it, IWM is small caps. What can't small companies do without borrowing more money is hold interest rates and take out more money. But if interest rates are at 20-year highs, how are they supposed to borrow money without getting fucking nuked? That's why you're seeing all this downside on IWM. If you follow Printing Tendies, he knows it's dog shit. He tells you not to buy it. If anything, just short that thing until it's about as short as your thing. You know what I mean? Anyways, moving on, we had NVDA also in flow. We had 234 million last week, with 117 against 117 million. This is a gambler's paradise. We got bearish bets on IWM's more downside because of their reliance on China and Taiwan, but we also have bets on their upside because it's Jensen Huang, and that man can make magic happen whether we want it to or not. Next on, we have QQQ. We had 210 million in overall flow with 64 million in total calls against 145 million in overall puts, with our most common contract being the $440 puts expiring on the 11th this week. And this was classic risk-off behavior by the QQQ bag holders, folks. Now, in our options flow, again, not options flow. Where's money going exactly? Let's go ahead and look at our dark pool data. So in our dark pool data, we had IVV with $980 million. We had SPY with almost, a couple $1 billion in flow overall. This is institutions getting ready for more downside. This is not a risk off. TLT, we had 43.6 million in inflow, which is our biggest rotation into bonds since November, folks. So that should be telling you something. We're going to open very red on SPY on Monday. This could be another week where we could buy SPY puts for the end of the week and just not look and be up 4,000 or 5,000%. GLD, we had 32 million in defensive positioning in gold, and HYG, we had 36 million in flow, most of it hedging. And again, HYG is our credit sector, so that's a credit hedge. This isn't bottom fishing. This is lifeboat grabbing at this point. No tech, no growth, no meme stocks, just straight up defense. Call them the Boston Celtics, or actually the Detroit Pistons with Ben Wallace. Now, next week events will either confirm the panic or escalate it. On Monday, it's quiet. Consider it the eye of the storm. On Tuesday, we have NFIB small biz sentiment, which could flash early warnings of more economic downside. On Wednesday, we have FOMC minutes plus Delta and STZ earnings as well. Thursday, we have our CPI report, baby. Wall Street expects 2.6% year over year. Anything hotter, forget the rate cuts. Take them off the fucking tables because they're not coming in. And Friday, we have an earnings kickoff with JP Morgan, MS, Wells Fargo, BlackRock, and guidance, as it is with every earnings report call. And I tell you guys this every fucking week. Guidance is everything. Now, our wild card, Europe, they've yet to respond. And when they do, I can promise you that shit ain't going to be pretty. It's going to be like that film 1917, a one shot, baby. But That's your institutional flow and macro recap from Trades and Gains. Hit that like, drop a comment, and tell us your CPI bet for Thursday. Whoever gets the closest, well, you don't win anything other than the satisfaction of being right. We'll be back with the CPI reaction special and more institutional flow later in the week. I'm Max Pitts. I'm your host. Go ahead and stay hedged, stay sharp, and watch the flows, people. Sign up for Investor Central Club so you can watch that flow. Or hang out and watch the flow with me. Anyways, that's all we got for this week. That's your weekly outlook report, babes. Love you all. Let's make some money this week. Let's make enough money to tell our bosses, bye, peace. I made enough to live off for the year. Okay? That's what we're doing this week. Love y'all. Have a great one.